All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So I'm doing this in real time here, the weekly video here. Market is open, and we're having a bloodbath today. You can see spiders down 2%, triple Qs down 2.5%. And this is the largest down move since, March 16th, 2020. So massive sell-off here today. That ended up being a very good time to buy stocks. We'll see if that ends up being the same here. Although we are much closer to the highs than previously. But certainly a historic drop nonetheless. We are coming into a big level here at 53.25 to 5300, right in that area. There is a fib support as well. Going back to the April lows, and you can see the 50% retrace is right there. And if we take this all the way down to the October low of last year, you can see it's a 236. So market is finding a little bit of support here as we get into the afternoon. Market's set to close in about 45 minutes. But doing the video here in real time so we can take a look at the market's drop here. So obviously, a lot going on this week. We had QRA, Yellen actually doubling Treasury buybacks. Market took that as bullish on Thursday, but and we had the FOMC as well. And the market did rally up to a 618 before really just getting faded hard yesterday into today. A lot of talk about recession. We talked about that last week. Copper to gold ratio kind of inching higher, and we can see interest rates coming down pretty quickly here. The 10-year yield is back below 4% now at basically 52-week lows currently. There is a little bit of a level I'm looking at around 3.7 for the 10-year in the short term should it get down there. But markets taking a hit. There is recession fear out there for sure. If we take a look at the 210 spread, we're almost back to normality. So there's the zero line, and we're at the least inverted we've been since the curve went inverted. That said, the 3-month 10-year is still a mess. It's actually going the wrong way. So take that for however you want there. But the recession drums are beating. You now have JPM, Goldman Sachs now pricing in, I think Citigroup now pricing in 2, 3, 4 rate cuts. So remember a year ago, they priced in 6 for this year. Then it went to 0. Now we're back to 4 by the end of the year. But it is now September rate cut odd at 90%. Another thing too is jobs was a huge miss today, but I want to talk about this a little bit here. So non-farm payroll came in at 114K versus 176. However, there is a little caveat here, and I don't think anybody's catching this. Credit to Gordon Johnson here. But 461,000 jobs lost to the hurricane. So that's something the market, I haven't heard anyone else mention that. Does that change next month? Do we get a huge beat? So that's a possibility here. Maybe the market overreacting to an extent. I think what's going on right now, part of the reason I'm doing this in real time so we can watch it, but I think a lot of this is leverage short vol sellers just getting smoked here. So VIX here now hitting a 2-year high. It is well off the highs intraday. You can see big surge here. And now it is starting to come back in as the market calms down a little bit, and we see a little bit of the market catching its footing. But if we go to like a 5-year look, we're going back to the 2023 highs essentially. Silicon Valley Bank blow up levels here in the VIX right now. But major move. We'll see if it sticks over the weekend. One of the things I've looked at recently is lately, the last 2 real sell-offs we have here. This was a decent correction. And incidentally, coincidentally, the last 2 hits of this trend line, essentially, the market bottomed, right? This was a Friday, and we just gapped up Monday. So they just kind of took everybody's liquidity and just ran with it. And the same thing happened here. By the way, this was right before Yellen did her issuance at the short end, which I believe she leaked to the market, or at least a select few in the banks. And we had that big gap up, and they left everybody at the altar before she announced that duration issuance or that short-term issuance. This time she did with buybacks as well, and I think that got leaked also. But nonetheless, do they just, if we hold this area here, 5,300, who's to say we don't gap up in the morning? But, we are coming off the lows here. Not exactly a V shape by any stretch, but, the market's holding this level. The next level I've got penciled in is around 52.20 to 52.30 on the SPX. And you can also see we're holding the 100 moving average as well. So big bloodbath here. Best bear move I've seen since 2022, personally, especially with that vicious rejection yesterday. We had the gap up. It looked like shorts were trapped on Wednesday, and then they came in really hard and brought it down. That was a bear statement candle there. So lots of selling here. Very good price action for bears, and we're kind of coming into that time. Quarter three is always tricky, especially in a big rally year. Usually into the fall, that's when you start to see these corrective moves start to take place. I thought we would have been a little bit closer to August personally, but we're definitely seeing that volatility get uncorked. Do they get a control of it next week? I mean, next week will be a little bit less crazy in terms of data. There's not as much economic data. We had a slog this week. Jobs, we had JOLTS, QRA, we had the Fed. And then, of course, jobs today on Friday. Next week, we'll not have that. So we'll see, does the market stabilize over the weekend? But right now, very, very good price action here for bears. And again, next level here for me is around 52.20 to 25 to 30 or so on the SPX. It's basically would take you back to the that May breakup candle. Triple Qs here, again, down 2.5. And we are into that May low right now. Again, previous all-time high. Good test candle support with volume there. So you're seeing the market kind of slow down the selling right now. We had a good slice in the morning, and we haven't really followed through since then. So, you are seeing a little bit of, we are into a little bit of a demand zone. If we take a fib from this low here, from the April low, you can see we just hit a 618 today. So we'll see if this offers up a bounce here. But sellers definitely asserting themselves here today, and good price action. Again, like I said, for bears, small caps taking it the worst. Again, down 3.6. IWM here should have some support in this area. I don't see it going too much lower here in the short term without some type of consolidation at the least. But very good sell. And it was at 52-week highs 2 days ago. And it's down, 228 to 207 in 2 days. Pretty remarkable sell there. Diamond here down 1.8, holding the 50 moving average. There is support here at 395 though. SMH. You see I've already got the fibs on there. Big slice. Could go a little bit lower. 210 area is the 50% retrace from the October low. You also have the 200-day below that. I'm also watching the SOX. SOX is a little bit different. It's not as skewed towards NVIDIA. But you can see the SOX actually did hit the 200 today and the 50% fib. So definitely some support here, or maybe a little bit lower on the semis. But, great slice here. No bounces. At some point, we will get a massive squeeze in these names once the selling is done. But right now, vol sellers blowing up. Hey, we could get a margin call Monday too. But right now, starting to come into some interesting levels here on a lot of things. IGV, cloud software. Look at this dump here. We can go back to this old trend line, and that's where it's essentially sitting right now. We obviously sliced it before, and now coming back in. Look at this weekly candle here. So good double top there. There's still room for a higher low. It's holding the weekly 50 MA. But definitely a very good sell here across the board. We can see the transports as well, down 2.78. Again, very strong 2 days ago. Big difference in 2 days. And we're still holding this trend line right now, but definitely an ugly candle wiping out that rally. All right, we talked about spreads, but we can talk about interest rates here specifically. 2-year yield down 3.8. So that's getting close to the 2023 low as well. A lot of calls here for going short rates here or long bond. I think you kind of missed that boat here, at least in the near term. You should have been doing that up here. And just another thing too, I just want to caution against this. I'm still not super convinced the long end's going to come that far down. It's looking at the 3-month 10-year. This is still inverting further. I think cuts can exacerbate inflation, and I think they will. I think that's going to be the quandary that the Fed will be in. But remember when everybody said that here, let's look at the 10s. Remember a year ago when everybody said that the 10-year was going back to 1.5 when we were back here in April, and it went to 5. So just be aware we're in a very different macroeconomic situation than we were 20, 40 years ago, or I should say the last 40 years. But right now, 3.7 is a big level on the 10-year. I do think it does hold for now, at the very least. 30's coming down, but still well above the lows again. Curves uninverting, obviously. XHB, big outside move last 2 days, but it is holding the 110 handle and it's holding that green breakup bar. Home builders are just so dang resilient. I mean, it's unbelievable. I mean, they are down 2 3/4, but you think they'd be down more here. And they're holding that 20-day moving average. It's pretty remarkable. By the way, speaking of moving averages, again, everybody's throwing themselves off a cliff right now, but we're really just into the weekly 20 MA on the SPX. That's really all we're doing. And that's all we did in April. And again, hypothetically, let's say we do recover Monday. All this, freaking out is going to look kind of foolish here. So just putting things into perspective there. But XHB here down, trying to hold the 20 MA by the end of the day. VNQ holding up too, only down 28 cents. So commercial real estate, go figure, one of the strongest sectors out there. By the way, defensives are still doing good, but gap and crap on XLU. XLP's hanging in there. Again, I think this is a late trade. If you're trying to get into this, you should have been buying it kind of beforehand. We're kind of like high on the hog at this point. All right. Let's get over to, so we talked about VNQ. You have financials, XLF down 2.6. So pretty good slice there. And again, weekly, very good outside candle, wiping out the last 2 weeks of trading, 2.5 weeks of trading. But again, still above the weekly 20 MA, but a very good reversal candle nonetheless. KRE, very good outside move as well. That exceeded my upside target by quite a bit. But definitely a good slice here. The positives for bulls here is you have room for higher lows on the KRE. You had a really good rally here. You didn't build any support on the way up. That's the problem. But you do have room for higher lows. So KRE and KBE, again, getting hit. Broker dealers getting hit big time. So maybe some of these jerks were way too short volatility, and they finally got what was coming to them. Again, there has never been any problems with this chart here on the broker dealers, except for the monthly. I've told you that it's just too overbought on the monthly. But it takes time to play out, right? I told you it was overbought in the monthly back in probably March, April. But, also saying that like this can take a while to play out, and it's maybe starting to right now, but very good outside move there for XBD. Oil down big time as well. Again, I talked about that in the low 70s. That's probably where it would go, and that's where it is. Let's see if we got, we hit a 786, so it may have a little bit of support here on crude. There's talk about Iran and all that stuff. I think oil would be up a lot more if that was going to happen over the weekend, and even if it does, I don't know. I think this is a recession trade right now. That's what's going on here. I will say ExxonMobil now has a PE of 8.8. And this chart's holding up really well. They reported earnings today. Only down. I think if the market wasn't getting slammed, this would be up a lot more. I'm actually this chart here actually looks pretty attractive. Honestly, this is a good let me get rid of these old lines here. This is a good consolidation pattern, especially on the monthly. I think Exxon's poised for a move here. And although XLE is down, this has a lot of stocks in it. I still really like the monthly chart. I think energy's probably going to be a contrarian played here pretty soon. Energy stocks specifically. So we'll see about that. We need to get the right setup. XOP, lots of damage though in the near term. Look at this, 5% slice. That's a breakdown for sure. But the big picture, it's still just a big consolidation pattern. OIH, my favorite, getting hit as well. But I guess where it went to, right into that lower wedge trend line, right? So right there, and we'll see if it recovers here. I still love the monthly right now. Good pattern here. It's tight, and if that starts to break up, that's got 500 written all over it. It will not be in a straight line though. CCJ filled out Head and Shoulders target, so very nice down to the 38 handle, and we've been waiting for that for a while. URNM, again, I told you guys to avoid this. Hopefully everybody took that advice. But as soon as we close below that weekly
breakup bar, it's been all downside. We even back checked to that level the other day, and a big rejection there. Same thing with the NJ. So I told you guys avoid uranium based on that sell signal, and they are now in full correction mode here. Nat gas, let's look at the U. Yeah, all-time low for that contract. We'll see. Nat gas tends to bottom out around, if not July, then in August. I think futures curves got it priced up into pretty much end of the year. So we'll see when it starts to bottom out, but definitely still been in a lot of trouble here. I don't see it going too much lower than, $1.90 though. We'll see, which is where it is now. DXY, big move down, of course, with the recession narrative. Weekly, it's going to lose that bullish green bar, but I know this is going to be fun, but we got a whole month, and say it recovers, it could still save that monthly green bar, which is the same area, so 103.88. But as of right now, face value, good slice on the dollar, and it is headed lower. Everybody's talking about the carry trade blowing up. I don't know, they've been talking about that for a long time too. But we did get through these trend lines here. And we have made a lower low on the yen. But dollar yen now in free fall. Gold actually down a little bit today. I think a lot of the time, so a lot of people are trying to figure this out. A lot of people, you got to understand there's more to a market than just macro and what makes sense. When you have people getting margin called, they sell assets that they don't want to have to sell. They sell things that they're up on. They sell things that are stable. Does gold fit the criteria for all of that? Well, of course, it's at an all-time high. It's stable, and it's things that people own for a long time. It's literally all three of those things. So this can be due to margin calling. And in fact, I heard a lot of terrible takes back in COVID, like, why are people selling gold? It doesn't make any sense. Okay, well, when you're down 20% and your broker's calling you, you have to sell something. Right, you own gold for situations like this, so don't get excited about they're manipulating gold lower. Just there's other reasons for it. Okay, guys. Like, by the way, we're at all-time highs here too. It can have a down day. Don't freak out. That's my point here. But I do like gold into the fall here. I still think we could get one more little pullback here, but I do like this how it's setting up. GDX down pretty big here. Again. A lot of things getting hit. SIL down 4%. Silver here, flattish. So silver holding up with the quote-unquote recession talk. So not bad to see that. Platinum here, backing up against this trend line. It did go to my 618, though. And it held. So, but got to get through that trend line there to repair that. Chart damage, and then palladium does, it might as well not even, nothing's happening in palladium. Palladium's does its own thing. Copper here actually holding up well. So again, you got like a, I think a lot of this is like this job stuff is over, at least right now, short-term overreaction. I think a lot of the selling today is margin. It's leverage short vol blow up. Because like, yeah, we're seeing oil down, but like copper should be crashing, right? And then the 3-month 10-year, I mean, does anybody want to explain that one? But in any case, without getting too sidetracked, copper up 1%. You could be making a case, so this is making a bear flag here. I think it's attractive for a bounce here. It's getting close. I have not initiated a position yet, but I'm definitely interested in that for a bounce here. Anyway, lastly, Bitcoin down 3%. 3% is kind of like nothing for Bitcoin, but it is below this breakup bar low, and if we close below that, I think lower prices are likely. But it still has plenty of room to stay inside of this channel. We flip back to a weekly, and we could go down here. There's nothing stopping us from just doing this, right, and then going higher eventually. So I'm still in the camp that this is just a big picture consolidation pattern to break out to new highs. All right, so it's about 3:30. Let's take a look here on the intraday just to see. Yeah, so Spider is upticking a little bit. We'll see if they try to sneak in a little save bid. By the way, Apple's helping the market out a lot here, doing a lot of work to save this market. So Tim cooked a little bit with his quarterly earnings. got to get above 224.80. If it can break up and probably save this market to an extent. By the way, Amazon taking a really good hit, but it is coming off the lows pretty nicely. So again, a lot of repricing, a lot of deleveraging, and repricing of risk is kind of how I see this. I know that the macro looks a lot worse. I see it more as repricing and deleveraging. And again, a lot of funds really offsides in leverage short vol. But VIX coming in now finally as we towards the end of the day. Monday will be interesting. Again, a lot less data to get through next week. Market should be able to trade a lot more freely. And we'll see if some hedges come off and market maybe can get a bounce here. But 53 is important right now. And again, like I said, 52.25, we'll call it, is the next level if they try to flush us again on Monday. But right now, very good sell here, and one of the biggest down weeks we've had in quite some time. So anyways, guys, I'm going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. And I'll see you guys all next week.